Good
evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Sunday, December the 10th, 2023. Well, the first thing you're going to notice is that the contract has rolled. So both the S&P and the NASDAQ are now trading the March 2024 contract. So the December contract actually has 5 days of life left. They all expire on the 15th. So it trades through Friday up until the close, but the contract rolls because there's a whole bunch of funny business that goes on in between. And we're already seeing a great deal of that right away in these very large swings that we've already gotten. And the reason is because they're rolling out that contract. And for example, I can go over and I can take a look at the S&P contract, and we will see more evident actually in the NASDAQ, but here we have it. 5 days, 96 days. So the first thing, the price difference is about $52, and that's interest. So we, if you're buying long and you're borrowing on margin, you're going to pay 52 days of interest to hold that position, to hold that stock or that index. And so that gets priced right in right away. So that's the price difference, is that the amount of time that is going to be, we have 96 days between today and March of 2024 expiration. So now what is happening is we're seeing, you're going to see these catch up pretty quickly, that we're seeing the roll happen between this contract, the December contract, and the March. So if there are long positions in that December contract and they're rolling them out to March, otherwise they expire and they may be against different types of positions. They don't necessarily have to be against options in the ES or options in the SPX or the options in the spiders. The spiders have their own underlying, but they can be used just to hedge a portfolio or run things against other positions. So they need to roll them out unless they're intending to close that position. So in any case, there we have it. We now have the roll. There's about a $52 difference between the two contracts. So hence we gapped up today. The market close, I believe, is a 46.02 or 46, somewhere just above 4,600 on Friday afternoon. And so right now we're hiking it up, but I can get the March contract so we can see it all here and just put together what actually is going on. So the market, in my opinion, is still continuing higher in a minute for a fifth wave, of which will be 5 waves in and of itself. And we have wave 1, 2, we're in a third wave, and within that looks like we're inside that third wave. So we're inside the 3 of 3 is how I'm viewing this. We have our projections, where wave 3 would be equal to wave 1 has been right pretty much where we're trading. That high at 46.6250, that is 100%. So anything above it puts wave 3 into that longest territory. So in other words, the longest and the strongest wave. So whether that completed the third or where we got a little bit more, which I'm thinking we likely do have a little bit more to go within that third wave. So these are minuet degree third wave. Our next line of defense in terms of resistance actually comes in at 46.91, right? Because what we're looking at here is wave 3 is equal to wave 1. I'm always going to be looking for a little bit more because it's always considered the longest and the strongest. So, but basically anywhere in between here and here could complete it. What this is indicating is the minute fifth wave would be equal to minute wave 1 at 46.83.50. So again, this is where we're looking for a completion point for the entire fifth wave. But again, we have additional resistance on that level to 1.618, which takes us to 47.33, 47.34. Again, this would be related to the third wave. and I'm not less necessarily looking for it to go up that high. But here's the trick. We should now begin, if they really are believing that we've got about 2 weeks left before Christmas, and that we've got to have this year-end rally, if indeed that's when it's going to happen, then we probably should start to begin it as we're heading into that December expiration, which is, I believe, a triple witching. So that next Friday is a larger expiration. So we not only own all the underlying, but we have, I think the bonds will have December contracts going off. We have just a lot of things expiring. So we have futures, we have options on futures, et cetera, all pulling in and expiring on December the 15th, plus all the underlying component companies and their options. So it should be fairly large. And it gives an opportunity for a lot of funds to settle out positions, carrying what they want forward, adding it to the portfolio in terms of if there are options that are going to expire or futures that are going to expire. So things kind of start to roll and you get figured in that way as well. So we should have, I think, a fairly active week as we build towards that Friday expiration. And I believe what I'm going to be expecting is a continuation of the upside, and possibly we get this thing all done. Now, again, if we're really thinking that this rally, the year-end type rally, the Santa rally, whatever you wish to call it, is going to carry out through the balance of December, then we are eventually looking towards these levels up in here, 47.38, 47.40, 30 to 40. So again, we had it here down below via the December contract. We had 46.40, 46.30 to 46.40. Now we're going to add $100. So we're thinking where we can end up with in minute 5 up here between 47.30 and 47.40, I'm going to call it. Now, we do likely have one additional up there is where minute 5 would be 2.618 times the length of minute wave 1, and that's at 48.14. That would push this index to a new all-time high if it got there. Am I necessarily looking for that? No, I am still just looking for the completion point of the primary B wave. So primarily, I am looking for the additional completion of an intermediate ABC up to put in that finishing move for a double ABC to complete primary wave B and set the stage for a C wave decline. Just to kind of touch on, because I'm waiting for all the charts now to meld and to be put together, which TOS does pretty well. It was not showing today. If I go out to my longer term charts, are still kind of very off right now. So I got to wait for all that to work its way through and to kind of work and just to become clearer in terms of how things are all going to work out. But my long-term counts, I want to add this, my long-term counts have not changed. I still believe that we are completing. Again, now I'm doing this against what we saw happen within this rally phase and within the month of December, where we saw that breadth thrust indicator be triggered. And it was triggered in May, and it was triggered again in November. So even including that, it still fits within this primary B wave, and it still fits with how this count is all working out. I mean, I went back and I really looked at a lot of things, and I'm not going to change anything that really led up. So I'm not going back to 2009. I'm not going to go back to the pandemic. I'm fairly satisfied with how I've counted all of that out and then how the market is reacting now. I still am looking for a primary C wave down before we do get that larger rally. Now, the only difference, again, this is on my big picture, the only difference may come in that I need to adjust a degree. So in other words, we reached a cycle degree high in January of 2022. And what I'm counting as a primary A, primary B, I'll leave open the possibility that it could be a cycle B, which could push this market again. We could continue to go higher, run it right up to a new all-time high, Still then, I would likely move the degree versus the actual action of it being a part of a much larger continuation of a rally phase that I believe completed in January of 2022. Now, based on that, now again, that's the big picture. I really did want to put on a larger update, a podcast, the technical big picture update, but I'm going to wait until I get the charts together because this really had not been added in, and it just, the roll happened today. So I've got to let all that kind of work its way into the charts, and then we will go from there. Now, what I find will remain interesting is how this all plays out. We continue to get that there's still that the Fed's going to start cutting, but I think that we need to start realizing why the Fed will be cutting should it happen in June, July, August, even as early as March. If we end up dropping into a recession where we're seeing this devaluation and the currency, this devaluation in the stock prices, it's not really going to have a lot to say about, oh, these companies are really bad companies and blah, blah, blah. It is going to have something to say about earnings. It has something to say about the dollar. It has something to say about consumers having cash. It has something to say about interest rates kind of remaining stubbornly high, but they may start to pull them down. And it shouldn't actually give the market these great big boosts like the economy is great, because it's going to be happening within a recession. Now, again, that's part of a larger picture update, and I'm not prepared to really go into that right now. But let's kind of finish up here, finish up the NASDAQ, because I do have one other announcement that I want to make and include today for everyone to start really considering. So again, I do believe that everything's kind of lined up right now. We got everything. There's the 200, the 50, the 20, the 8, all kind of lined up for this thing to continue. So our moving averages, at least on the hourly chart, are in place. Let me take a quick look at the daily chart and let's see what they look like out there. Here as well, they are lined up to go up. So we're in a good position to finish this move. And so that remains, and keeping it in a positive. Prior, when we were still working with the December contract, the daily was having a bit of a problem here. And I am going to get rid of that because I don't need that out there anymore. So even on the daily, here we have 3, then we have 4 coming in as a triangle. We're in that 5th. We did launch. We popped up out of that triangle, which is all good. And so things are pretty much on track, I feel, for the rally to continue to take us up. And we've made the adjustment to the fibs to include these higher levels. And again, if you were dealing with a futures market or even of anything within that December contract, it expires. So you likely have rolled it out, or if you haven't, you need to really consider to making an adjustment to your positions. If you're shorting in a particular stock based on analysis, they'll show that we should start to decline. Outside of the Magnificent Seven, I think that you're likely sitting okay. It's many of the stocks. It's this greater portion of this rally has been in the Mag 7, and I would assume that is likely what may continue, with a couple of other stocks also participating. But right now, I believe what I'm going to be looking for is a continuation to the upside. I have 46.83 to 46.91 to complete wave 3. This one is actually for the 5th wave, but I still will believe it's going to provide some resistance. Once I do get an internal third done, I'll be able to put a 4th wave, and I'll be able to use this against that, and then we'll get our final. But this continues to be where I believe the entire structure, this minute 5th wave structure, is going to end up somewhere up in here. Over in the NASDAQ as well, okay? Just to kind of go over, the NASDAQ has about 200 and some odd dollars. I think it's 220, somewhere like that, between the two contracts. Actually, it's a little bit more. If we're having 16,003 11.75. And then we're going to take off 16,101.50. We have about $210 between, and that's interest. March over December, that's the interest that would be paid to carry a position. So adjustments are made, and I've made those already within our, first of all, I adjusted the chart so everything was like the 3 wasn't down here. So I've adjusted to keep things in alignment. And here as well, I'm not as pleased, but I still think that that was the 4th wave. And the only other count actually would be that this is A, and this is A of B, and this is B of B, and we're in C of B, which I believe if we were to work it out, there's a high that can come in somewhere around here, basis the March contract, and we still get a stronger decline down to put in a 4th wave. But I'm running it right now as if we are in that 5th wave, and there's a very strong possibility that it'll be a diagonal. So if we start to get this diagonal going and we're working in getting it into a diagonal, I believe then this could be wave 1, wave 2, ABC up in a 3rd. And so I've run the fibs. Let's open it up so we can take a peek inside. Wave 1, wave 2, ABC, wave 3, 100%, right? Where wave 3 would be equal to wave 1 comes in at 16,369. 1.618, 16,538. So we could see a strong rally or just a mediocre rally. There's a smaller rally could come in. And again, it's still going to be counted. It's a diagonal, but it's a 3, 3, 3, 3, 3. So still a 1, 2, 3, 4, 5, but they're all going to come in 3s, and it will diagonal. It will produce this run. And if we're looking at here, minute wave 5, 1.618, right where we are, right where we've gotten. And that's right about 16,330. Our high right now is 16,323, 22.75. So we'll call it 23. And our resistance is 327 up to, actually, that's it, 325 to 327. So we're pushing up against resistance here. And whether that actually holds, I'm not sure. And that would be 1.618, where minute wave 5 is equal to 1.618 of minute wave 1, which was not that big of a wave, which is why these are a little bit lower. 2.618 is 16,577. So if we get this and we're in this, we finish a 3rd, we get a 4th, we get a 5. This is, again, the area. This one applies to the 3rd wave, so it still could be applicable. And we get a 4 and a 5, and this could be still applicable for the minute wave 5. So again, making the adjustments for the contract roll, we're still below the all-time high here in the NASDAQ, even within rolling contracts. So we've had now several. And again, so we're staying within parameters that are allowing us to continue to consider that this is, again, let me just move this out and take a look at it on the 4-hour chart. We can see a minor wave 4, we're in a minor 5th wave, bring it back down to that hourly chart. And here we're going to open it back up. We're in a minor 5th wave. And so these actually are within that minor 5th wave, let me go back out. We are in minute 5, right? So I went all the way out to look at the 4-hour chart. Minor 5 started down here. If we take a look this way, we have minute 1, minute 2, minute 3, which was the huge. Considered we had all of the breadth thrust indicator triggering right in here. We had tremendous rallies. We had it subdivide and then subdivide. So this was a glorious 3rd wave. Then we had a 4, and it can still be within 4. We've not yet gotten above that level, which is 16,417, according to the December contract. We've not broken above. On the December contract, it was 16,250, 52 or something in that area. So we have not broken above that high yet based either contract. So this still could be a wave 4, and it will just end up being very flat. And what I mean by that, we get an A wave, we get an A, B, C, B wave, and we come back down towards this area for a C wave and put the 4 over here. Now, am I looking for that right now? Stranger things. So if they start the week by kind of toppling a lot of what they put on in preparation for Friday, we don't know exactly how. So I'm playing both sides in terms of presenting analysis, a continuation of wave 3, or even a continuation of, if this was indeed going to be an A, B, and a C wave, 1, 2, 3, 4, 5, we still are likely going to get up to 16,369, 370, even if, and then turn. So if it's an A, if this is A, B, C, B, and we get a C wave down, it'll come in 5 waves. It should be pretty strong, but it should be fast and get us down there. And then we still rally back up. That would be the ABC, and we put a 4 over here. If a 4 stays in place here, we get a 1, 2, and here again, we start to look at, is it going to be a type of a triangle? No. I think we could have wave 1, which is 5, wave 2, which is an ABC, 1, 2, finish a 3, 4, and a 5. Or it actually could diagonal. And so we have a diagonal in both markets. It does fit. And then we'd still be looking at 15,577, possibly. I'm not going to go out there to that far. That is the minor wave 5 at 17,677, which would put it into new all-time high. I think that once I can get and fill in our gaps in terms of where our resistance is going to start to come in, we'll fill in these gaps here, and we'll be able to, for example, I can put on here 3618 again, because it wasn't as small, but it was pretty small. And let's see where that one comes in. You see 16,824. So that, again, that is actually into new all-time high territory for the NASDAQ, but, not all that great. So we have numbers. We have it up. The previous high is 16,768. So that's as high as it got in January of 2022. So again, pulling this open and oops, oh, come on. It is such a pain. Sometimes my chart is such a pain. We're taking a look here as well. We have all of our indicators pointing higher, which is good news in terms of the rally continuing. So again, here as well, my longer term count has not changed. I'm looking for the closing moves, the finishing moves to this minuet, minor, minute, minor, intermediate, and primary degree move. So all the components all running up, getting into a diagonal triangle, which would be very, very fitting to complete this longer term move, which began in October of 2022. So it's well a year in progress to get it from that low to where it's going to end up and set the stage for what I think should be a pretty dynamic move down. Now, while I do have a few moments here, and I know this is probably a little bit longer than we were all thinking. Now, what I really want to talk about right now is I am working together with a colleague that has come on board and actually was a coaching client and has learned Elliott Wave, has got some superior trading skills. And so we're working together to change how we're going to be presenting ourselves, and particularly how things are going to be changing. And I know I've alluded to this prior. And so we're working on setting up a trade room, which I already have in existence, but it's going to be a trade room that's actually going to be on Discord. So we're setting up the servers, we're setting all that up, and it's going to be operated with, I know you're all coming on to get my updates via YouTube. And so we're going to run through memberships on YouTube. And right now we're going to have different levels of membership. But what I want to make really clear is that I have been talking about during the week, it's like, oh, it's a great trading day and plenty to do, nice P&L by the end of the day. And that continues to be an accurate picture. But I want to make a trade room available at a reasonable price. So we're going to have different membership levels. We have our basic membership level, which might be called bronze. And within that, traders and subscribers would be able to come in and get the daily analysis and the big picture updates, et cetera. That will still be available, and it would be through YouTube. Then we have a next level up where we're going to include additional analysis tools, additional things, but primarily all the way up towards that top, either on like a gold level or platinum level, we're going to have a trade room. And in that trade room, you're going to have my analysis on an intraday basis, but plus the analysis of all of these moves that we are capturing and how we do it, and what the calls would be, and where we're running algorithms that capture these types of moves, and you get the signals, this, and this. So in essence, this is Friday, folks. This was the start. And then we jumped into this one. And by the time this finished, we had members of the trade room that had met their goals for the day. And by the second half hour, definitively had met even larger goals. And I'm talking between, $500 and $1,000. And what we will be teaching is how to manage risk, how to pick up the signal, how to trade the signals, and then giving signals. And we're going to put that into a trade room. So more on this as we start to put it together. I will be putting it out in a separate video so that everybody will get an idea. And then once we have those levels set up on YouTube, people will be able to start subscribing to those levels. The trade room will then would be opened, and we'll get this whole ball of wax going. If you have any questions, if you have any comments on it, you can leave them in the comment section. That would be great. But make sure that they're in the form of a question and not a criticism of what we're intending to do. What my intent is to try to improve things for people. And there are a lot of people that have an interest in learning to day trade. There's a lot of money to be made, and you can still carry a longer term position, but trade shorter term while you're waiting for something else to come in. There's all kinds of things that really can help. Anyway, more on all of that, but I want to touch base with it. So that's going to be it for today. And the next update will be on Monday, December the 11th.